Now let's look for the practical case for bank reconciliation. Of course, we'll use Excel sheet in order to do bank reconciliation. So we have an example. This is the template that we will use to do the bank reconciliation. At the end of the month, we get two statements. First, we have the company ledger for the month of August. Then we have the bank statement that we received from the bank for the same period, which is August 2024. You see that we have the same beginning balance for the period, and it's the same in the bank statement. So this is the first step that we need to do when we want to make sure that the beginning balance is the same in order to do our reconciliation. So when we get the both statements, we start our reconciliation. You see that we have the same value. The beginning is, we have the same balance, so we can highlight them. Then we have for the bank statement at the end, you see that we have ending balance per our book is 78,000, and from the bank we have 82,000. Then we have debits, which is all the cash in, and we have credit, which is the cash out. This is what's happened in the bank. Always when we see credit, when there is positive amount, it should be credit. And when we have deposit, that's mean cash in, it's shown in credit. So this is the opposite as in the journal ledger. And we have withdrawals, which will be shown in the debit side from the bank. Now let's start our reconciliation. So we have the first amount that you can see in the bank, 8,500, the same amount, it's shown in the bank statement. Then we have 3,425 US dollar. We have the same value in our bank. So we continue for all the similar item. We check the date, we check the check number, because sometimes we get the same amount, but it's different transaction. Here we have payment from, this is payment received, 12,000. We have the same customer, the same period, and we continue our reconciliation. And of course, we may check if there's we miss something, and both of them are the same. We have the same amount here. Then we have cash received, the same here. And we have for the cash out, the same value that we receive. So we finish for the journal ledger. We have all the transactions that in the journal ledger are shown in the bank, except one transaction, which is 2,375, which is check 4507. We need to make an investigation why this amount is not shown in the bank. And in other side, you see that some transactions are shown in the bank, but is not yet booked in our account. So let's start by the adjusting the bank statement. You see that there is an amount for 2,375 was issued. That is check 4508 issued to insurance, but has not cleared in the bank. So here we need to adjust this value in our bank account. So we need to deduct this amount. To do so, we need to go to the reconciliation sheet. This is the initial balance. This is for journal ledger bank account. So this we put here the amount that available in the general ledger account, this is the amount that's available initially, the ending balance in our general ledger. Then we go to other side for the bank reconciliation. We put the initial amount. We put it in credits because we said that this is a bank. Then we continue our reconciliation. We said that there is an amount for 2,375, which not yet shown in the bank. So we need to deduct this amount from our bank account. So we go to bank account. So because we said that we deduct it, it will be shown in the debit because we will reduce our balance. And we can bring also the description and the date as well. We put the date and the description for this transaction. Then finally, our balance for the bank should be 80,100. So this is the first step, adjusting the bank statement. Second, we need to adjust all these transactions that it's shown in the bank statement and is not yet booked in our ledger. So we have different transactions. First, we have electronic deposit for the amount of 5,350 was not recorded in the company book. So we need to bring all these transactions. So we'll bring this first amount. So what we can do to make it easier. So I will create new sheet. To make it easier for reconciliation, I put both of them on side by side, so to make it easier to track. So we said we need to add all these transactions. So the first one, it's 5,000. I will put it in the debit side because it will increase our balance. We'll bring as well the amount, date, and the description. And we have also another transaction for ATM. I will copy paste. Then I will put the amount in the credit because here we have 500 withdraw was made by the owner, but not recorded in the bank. So it will deduct our balance. Then we continue for the remaining transaction. So copy paste to make it easy. So we bring all the date and description. Then we take amounts one by one. So the first one we have 25. So this is withdraw. We said that withdraw, this is the cash out. So we need to put it in the credit side for our case. And the money that we receive, this is the interest earned, but not booked in our system. We put it in the debit side to increase our balance. The same thing for electronic payment. We put it in the debit side and we get our reconciliation completed. We make check. We see that the final balance will be 8,000 in the general ledger account, and which is similar in the bank statement. You need to make check, and you see that the value is 0. There is no difference. So this is the first thing that we need to do for bank reconciliation. You see that this is the total addition, debit. Here we have total credit. Then we have final balance, which is the initial balance plus total addition minus total deduction. In the bank statement account, there is credit balance plus the total credits and total debit, and we get the final balance. Then when we complete, we need to book all the different transactions that we haven't booked yet. Example here for we put cash in for the amount of 5,800 will be booked as cash in, and we credit the customer or service revenue for the interest, and we debit our cash and we credit our interest income, and we book the $25 as monthly maintenance fees. We debit the charge, which is account, income statement, P&L account, and we credit our bank.